Business leaders were significantly less optimistic in the second quarter than they were at the start of the year. The Conference Board measure of CEO confidence in collaboration with the Business Council fell by 26 points in the second quarter of 2025 to 34. That is the lowest level since Q4 of 2022, with 83% of CEOs saying they expect a recession in the next 12 to 18 months. Joining us now on this, Mike Archbold, the Conference Board Program Director, and former GNC CEO Paul Grunwald, still with us as well. Mike, it's great to have you here. Talk to me about how much of this collapse is tariff related.
So first, thanks for having me, Madison. And it's interesting because this survey took place basically the week before and the week after May 12th, which was the date that China and the U.S. kind of created a ceasefire on trade and tariffs. And while the responses from the CEOs were less pessimistic in the week following, they remained pessimistic. And not only were they pessimistic, the survey actually inquires about CEOs' confidence or view of the economy now versus 6 months ago, and also 6 months from now versus now. And both of those indices registered as pessimistic. So there seems to be a lot of other things in addition to tariffs. Tariffs is certainly a factor here, but there seem to be a number of things on CEOs' minds.
So what are those other factors on CEOs' minds, especially given the fact that we mentioned in the intro, CEOs do foresee a more high chance of an incoming recession, but you also note that they don't see changes in their workforces coming up. So what are those headwinds that they think that they can stomach without having to lay people off?
So it's a great question, and it's interesting because the numbers that we saw in terms of the CEO perspective is similar to what we saw back in 2020, end of 22, 23, when there was a lot of consideration for recession. Now, we did avoid that recession in no small part due to the fact that companies did not do layoffs. And it appears from what the CEOs are saying, they're going to be in a similar situation, because they're actually reporting that they're anticipating no significant change in their workforce. But by contrast, the number of CEOs who are reporting that they expect to reduce their capital spending actually doubled versus the previous reading.
Yeah, and that's certainly an important economic indicator as well, Mike. My guest host, Paul Grunwald, has a question for you as well.
Yeah, hey, Mike, my question's about this wedge we're seeing between the soft data and the hard data. So a lot of the confidence indicators, including your own, are, pointing south and have been for a while, but the big macro indicators, consumption, unemployment, are kind of hanging in there. So what's your read on that? Is that a lag, or is there some new noise in the data, or have some of the linkages broken down? I'd love to get your take on that.
It's a great question, Paul, and some of the linkages certainly are shifting, right? Because it used to be these were great, predictive analytics, predictive numbers for the economy, and what we've seen is that CEOs are not acting the same as they have in the past. They're skills banking, they're hoarding labor. They're doing these things to make sure that they're well positioned, even if there is a recession coming out of that recession, that they'd be well positioned. But what's happening because of that is the unemployment's not going down. So it's changing the interaction of all of these factors.
And Mike, I want to go back to something you said about capital spending plans going down here. To what extent do you think any rollback of tariff policy might change that capital spending?
Yeah, so again, I think the CEOs will certainly be impacted by that, and I think that as I mentioned, the responses post May the 12th were actually less pessimistic, but still remain pessimistic. So I think that is something that we'll probably expect to continue to see until the CEOs can really get a better feel for being able to manage risks. And as you said, it's more than simple tariffs. It's a whole bunch of things, right? Because if you look at the risks that CEOs prioritize, traditionally, cyber risk has been the number one risk for their industry that they have cited.
Yeah.
That risk has fallen to number 4 in the most recent survey. And above that is geopolitical instability, trade and tariffs, and regulatory regime, all of which are more significant risks, which the CEOs really feel they need to get a better visibility on in order to be able to allocate capital and allocate labor.
Mike, really appreciate you joining us. Thank you so much for your time, and thank
Thanks
you,
very
Paul, as
much.
well.